Hello. It's been a hectic week in the markets, and so I wanted to reach out and provide an update on our thoughts and actions in client portfolios and provide some reassuring advice during this period of heightened market volatility. So what's happening? Last week, the S&P 500 U.S. equity index fell over 10% following the President Trump's announcement of some new tariffs. These tariffs, labeled as reciprocal, were much higher than expected and seemed to lack sound business or economic rationale. Very frustrating, as Trump's declaration aims to make America independent from bilateral trade deficits affecting over 57 nations with penalties ranging from 1% to 40%. Now, these actions essentially are like a large import tax rate, the highest since 1910. So what does this mean for investors? Well, this policy decision comes at a time when the economy was already in good shape with low unemployment, strong corporate profits, and low credit spreads. So the good news is that the underlying business fundamentals of the economy are not the issue here, but rather it's unpredictable policy decisions. Policy decisions that could be reversed as part of a negotiating tactic. Is this time different? Well, every situation is unique, and the solution this time could be a little less complicated. Because unlike the structural economic issues or high debt that we remember in 2008, or the extreme valuations of the 2000 tech bubble, or the global pandemic of 2020, this is a policy error that may not last forever. In fact, there are several administration off-ramps that could create trade deals in the meantime and see a change in the policies announced. So what are we doing about it? At the Wong Group, we are committed to looking for opportunities, managing risk, and staying diversified. We are in constant contact with our investment professionals around the world, gaining clarity and insights from the top investment minds. And in the long term, we anticipate that international securities may finally begin to outperform after a decade of long U.S. stock dominance. And this shift could occur as investors take some money from the U.S. and direct it towards governments that are increasing spending. In fact, last week, we trimmed some U.S. holdings that could see continued tariff risks while adding to international companies with strong businesses. But what do we suggest? Our advice is to remain consistent, be patient, stay diversified, and stay invested. Reflecting on past crises, we have seen that investing or holding on during times of uncertainty can be absolutely beneficial. And in fact, markets tend to recover sooner than you think. And during these times, you get paid to wait. You get paid to wait with high-quality dividends and interests from your fixed income investments. You get paid to wait for the markets to recover. So what do we expect? Well, we can expect that there will be continued volatility near term, as we're still in a highly fluid policy environment. Deals are already being made. There could be legal, social media challenges and posts that will influence kind of the market sentiment day to day. And it may be difficult for markets to bounce back until some uncertainty is cleared, but that could actually happen quicker than you think. For example, just this morning, a news headline regarding tariffs being paused caused the U.S. market to gain 5 to 7% in just minutes. Now, while that headline wasn't actually real, we expect to see deals being made and legal challenges to arrive. And so, therefore, you could see market sentiment shift very quickly. And in fact, it is very normal for the market to correct at least 10%, at least once per year. And as we've seen, and history has shown, drawdowns of 10 to 20%, and even more than 20%, happen more frequently than you actually think. But yet the market recovers and returns to new highs. We understand that the recent market volatility can be concerning and very anxiety-provoking, and it's natural to feel uneasy when the market experiences such volatility. But we are here to support you through these challenging times, actively managing risks while looking for opportunities to buy high-quality assets on sale. So turn off the news, go for a walk, and enjoy the life you get to live. Call us if you're nervous and want to talk further. My team and I are here to help you find clarity amidst the uncertainty and hopefully achieve some peace of mind. The table below, again, shows the performance of the S&P 500 U.S. stock market during periods when there have been significant declines. As shown, forward returns were better than average, and a year later, 3 years later, 5 years later, the S&P 500 was higher almost each and every time. Again, call us if you need anything or have any questions. We're here to help. And as always, my team is present, focused, and prepared to help find opportunities and help you achieve success long term. Again, at the Wong Group, we really value our client relationships and this active approach to taking smart risks in times of uncertainty. And sticking with a disciplined approach is the right approach. We look forward to hearing from you. If you have any questions, let us know. And you can reach us at 778-655-2410. Once again, thanks very much, and take care and talk soon.